Are here to announce our next big move, biggest move we've ever made for Revival Today. Behind me is a building that will look nothing like it looks right now when we finish. We're on just under 5 acres of property that we've just finished purchasing, which is going to give us the ability to have a state-of-the-art studio. And in that studio, something I've wanted to have for a long time, which is a live studio audience. It's going to be a 500-seat building when we finish with it that'll give us the ability to touch the world with our broadcasts. This facility is going to give me the ability to do what I've really missed, which is having you in the audience to minister to personally. Obviously, you can't beat the reach of digital media. We touch the whole world every day. But we have the ability now with this to lay hands on people, pray for people that are sick, a place where you can bring people that are drug addicted, demonized, and really give them the ministry that you can't get on YouTube and Facebook. I can't wait. And then beyond that, we're going to announce the launch of Revival Today Church. We're going to hold Holy Ghost church services every Sunday morning. I'll be there most Sunday mornings. This isn't going to be like some little side project. We're going to give you and your family a place you can go that's a soul-winning church that values the presence of God, where you can get prayed for and ministered to, where there's not a critical race theory lecture or a mask and social distancing, 10 minutes of no talking to anybody in the lobby. None of that. We're going to have a place where you're free and where you're free to experience the presence of God.
I'm incredibly excited because I know a lot of you have been asking about different meetings and events that we couldn't have during COVID, and trust me, we tried so hard. So this really frees us up to do everything that we want to do with healing meetings and women's conferences. So I am so looking forward to seeing you and having you be a part of this.
So I want to give you a twofold call to action. Number one, if your church turned in to a liberal nightmare in 2020 and you need a place to go, I would be happy to have you at our church. Number two, if you are a partner or a friend of our ministry, Revival Today, this is the biggest move by far we've ever made. By the time we finish remodeling that building, the acquiring of the property, you're looking at a couple of M's. So if you would stand with us now, I'll say thank you ahead of time. Pray and ask the Holy Ghost what He would have you to do. You've been so generous, and I thank you ahead of time for your extreme generosity. I know I speak on behalf of my wife, everybody here at Revival Today when I say we love you very much. And now I can say I look forward to seeing you face to face here at the new home of Revival Today.
Hey.
Yeah!
Good morning, everybody. Welcome to Check the Market. I hope everybody had a great weekend. Good morning, Naveed, Christophorus, Glad you got that creamer. Invasion Ministries, welcome to Check the Market. Who's ready to check the market this morning? Fake Bitcoin rally. Joe Manchin for Fed chairman. It's the title for today. Make sure you share the broadcast with everybody that you know. We're still trying to put some of these CNBC, Fox Business, whoever out of business. And the stock market's open. Ding, 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 ding. It's Monday morning, so we're a little behind schedule. Dow Jones is down a little bit. S&P is up a little bit. NASDAQ, so it looks like everything's fairly flat today. Oil's down. Everybody's talking about Delta. Not the airline, the Delta variant. I'm doing good. How are you doing, Lyric? Happy Monday. Well, I guess we'll get right into it. See what's going on in the world of finance, economics. Good morning, Sandra. Market, tech, business, whatever else we cover here. All right, let's put up the first article. Niraj K. Agarwal. Should I buy a house or a link to a picture of a pixelated monkey? Those are questions that we are faced with now in this generation. Should I buy a house for $300,000? Or should I buy a link to a picture of a pixelated monkey, which might go up more in value than the house does over the next year? What would you choose, the house or the pixelated monkey? Everyone in the back would pick the NFT, the pixelated monkey. All right, next. Buffett buys back Berkshire. Morning brief. So it looks, morning Doug. Looks like Berkshire Hathaway has been on a stock buyback spree since 2018, and they just posted their earnings. Let's see the article. Probably the monkey. Berkshire Hathaway released its quarterly results on Saturday morning. Who releases their quarterly results on a Saturday? Total revenue for the conglomerate hit $69.1 billion in the second quarter, while earnings per share came in at 18,000. That's such a Warren Buffett thing to do, to release your quarterly results on Saturday. He probably had nothing else to do. He's like, there's no 10Ks to go through. I might as well just release my quarterly results. Let's continue. Keep going. But as has been the case for several years now, one of the biggest headlines to emerge from Berkshire's results is the growing cash pile Warren Buffett's company is sitting on. At the end of the quarter, Berkshire's insurance and other businesses held cash equivalents, and treasury bills worth $140.7 billion. This is up from $138.1 billion at the end of the first quarter. The primary use of Berkshire's cash in recent years has been to purchase equity securities and specifically repurchase shares of Berkshire Hathaway. In the second quarter, the company spent $6 billion on buying back its own stock after spending $6.6 billion on repurchases in the first quarter, as Bloomberg's Kathleen Chiglinski notes. This most recent repurchase is the fourth largest since Berkshire embarked on repurchases of its stock in 2018, after taking almost 6 years off from the practice. Continue. In his most recent annual letter to Berkshire Hathaway shareholders, Buffett talked at length about share buybacks and the benefits of this practice, this practice can confer on shareholders, using Berkshire's stake in Apple and Apple's own repurchase plan as an illustration of this dynamic. The math of repurchases grinds away slowly but can be powerful over time, Buffett wrote. The process offers a simple way for investors to own an ever-expanding portion of exceptional businesses. And as sultry Mae West assured us, too much of a good thing can be wonderful. That is something that Warren Buffett would say. Next. Uber, Lyft prices at records even as drivers return. Data show average fares were at a record in July despite improvement in pandemic-driven shortage of drivers. I took an Uber the other day and I had to wait 30 minutes, which I've never had to wait that long for an Uber at the Pittsburgh airport. Has anybody else experienced that, driving Uber, where it's taking longer and longer to get a car? Let's see the article. Drivers are returning to Uber Technologies and Lyft after the company spent big on incentives to address a pandemic-driven labor shortage. That shift isn't bringing down fares from record highs, new data show. The average Uber and Lyft fare in the US rose month to month from February through July, touching new highs every time, according to data from Rakuten Intelligence, a market research firm that based its analysis on e-receipts from more than 1 million consumers. While the average fare in July edged up slightly from June, it meant consumers paid over 50% more for a ride last month compared with January 2020 before the pandemic. That's the most Americans have paid for Uber and Lyft rides in at least 3 years. Wasn't the whole premise of Uber to be cheaper than taxis? It should almost be like at the same price at this point. That's the sky-high prices, which the companies say are driven by the continuing labor shortage, come despite a recent influx of drivers, Uber said Wednesday. That 30% more drivers signed up in July compared with the month before. Lyft said Tuesday that 50% more drivers signed up in 3-month period that ended in June compared with the preceding 3 months. Yeah, Christopher said that at times, depending on where you are in my city, you're better off calling a cab because it'll show up and is the same price or cheaper. So the whole reason this company was created is unraveling at this point. Morning, Michael Frost. The sky-high prices, which companies say are driven by continuing labor shortage. Oh, we already read that. Continue. Yeah, it used to be cheaper to take an Uber and then just leave your car at home, but now it's cheaper to park the car at the airport. That's crazy. And then you're rolling the dice whether or not you're going to be there on time for your flight if they don't show up. The data is clear. Driver supply has not kept pace with the surge of demand from riders, throwing the rideshare market out of balance. Soaring prices haven't crimped bookings, reflecting consumers' tolerance for high prices after widespread lockdowns kept many at home last year. Uber and Lyft's ride business rebounded in the second quarter from the lows of last year, and data from Edison Trends show that consumer spending on ride-hailing remained elevated for the week ended July 19th, compared with the same week a year earlier. Neither company has publicly disclosed how ride prices have fared nationwide in recent months, nor have they said how many more drivers are needed to meet demand. But Uber said this week that prices were returning to pre-COVID levels in cities and states that ended unemployment benefits. That shift pushed more drivers to work for Uber in cities like Miami, Atlanta, and Houston, alleviating the continuing labor crunch and tempering high prices, executives said. Interesting. Morning, Eric. Let's see, next. In New York, San Francisco, and Los Angeles, Uber's top domestic markets, demand continues to outplay supply, and prices and wait times remain above our comfort levels. Chief Executive Dara Khosrowshahi told analysts Wednesday after the company reported quarterly results. An Uber spokesperson reiterated that the situation varies city by city. In some, he said prices are inching closer to pre-pandemic levels, while they continue to remain high in others. Uber said 90% of the 90,000 active drivers it surveyed in June indicated they plan to return by September. That's when the unemployment benefits end. So they're just taking the summer off, I guess. And next, Wall Street Investment Bank cuts China growth forecasts. And it looks like right now we're down on all indices. Just got a notification here. Dow down over 100 points, Nasdaq down 27, and the S&P down 10. Let's see what bank says they want to cut China growth forecasts. Thanks for watching, Tanya. Wall Street banks, Goldman Sachs, JP Morgan, and Morgan Stanley all cut their China growth forecasts on Monday after export growth slowed unexpectedly and on concerns that the resurgent coronavirus could crimp economic activity. I don't know who writes these articles, because every article that we've seen come out of China is that they're cracking down on businesses and all that. I'm pretty sure that's the main, that would be the main reason why I would cut down growth forecasts, and none of these other things. Chinese trade data released over the weekend undershot forecasts, while figures out on Monday showed inflation rising in the country's factory sector, potentially adding extra strains. JP Morgan reduced its quarter-on-quarter profit estimate for the 3 months of the year to 2% from 4.3%. Man. And trimmed its full-year forecast to 8.9% from 9.1%. Continue. Morgan Stanley lowered its quarterly forecast to 1.6, while Goldman cut its estimate to 2.3 from 5.8 and 8.3 versus 8.6 for the full year. Recent developments point at further downside risk to already soft third quarter growth forecasts related to the spread of the Delta variant, a series of regulatory changes in the new economy sectors. I think that's the biggest one right there. An erosion of market confidence. Yeah, erosion of market confidence because nobody can believe in the Chinese authorities anymore. Both JP Morgan and Morgan Stanley also predicted Chinese authorities would respond with support measures. On the monetary policy front, JP Morgan said the People's Bank of China main policy rates were likely to be trimmed by 5 basis points in the fourth quarter, while it would deliver 2 more 50 basis point cuts to bank's reserve requirements, in the first in October and another in January. Continue. It has already provided one cut last month. A mild deceleration in exports in the second half and an ongoing slowdown in domestic demand amid Delta resurgence may mean policy support could ramp up in the coming months. And we'll see. All right, next. Bitcoin rally meets resistance. So there you have it. Is this a fake rally that we're in, or are we going to the moon? That is the question. Bitcoin rally meets resistance as price approaches its 200-day moving average. Meanwhile, Ether maintains post-hard fork rally. Let's see the article. Bitcoin rallied as high as 44,575 early Sunday, almost hitting its 200-day moving average of 44,600 before slipping. The world's largest cryptocurrency by market cap was trading at about 43,700 on Sunday night. In a note last weekend, Matt Malley, chief market strategist at Miller's Tabak and Company, pointed to the 200-day moving average as Bitcoin's next key level and said if it breaks that level, it should be very bullish for Bitcoin, shooting a lot higher rather quickly. The weekend peak was Bitcoin's highest level since its most recent sell-off began in mid-May. Bitcoin has rallied more than 10% over the past 5 days, and it's up 32% over the past month. Ether, the cryptocurrency that runs on the Etherium blockchain, also continued to rally over the weekend following a hard fork last week. On Thursday, Ethereum activated a massive network upgrade dubbed London, which added a number of streamlining features. The price of Ether topped 3,000 on Saturday for the first time since mid-May and was trading around 3,013 as of Sunday night, according to Kraken data. Its price is up about 12% over the past 5 days. Next, or continue. If the S&P 500 breaks above this key level, it could set off an epic emotional squeeze, not unlike 1999, strategists warn. Let's see the article. Positive hangover from Friday's blowout jobs data may be fading as investors greet the start of a new week with fresh concerns about the I don't know about that. I think it's more about the CPI numbers that are coming out on Wednesday. Goldman Sachs is warning that China's economy might take a hit from that virus, and that isn't helping oil prices, which are getting pummeled this morning. Stock futures are mixed, and gold stock futures were mixed, and now everything's down. And gold is also limping after so-called flash crash in Asian trading. Our call of the day from BTIG's Chief Equity and Derivative Strategist Julian Emanuel and Equity Strategy Associate Michael Chu predicts more drama as the pair warn of a near-term top for the S&P 500, with meme stocks the possible trigger. They point to the so-called wall of money made up of fiscal and monetary stimulus that has helped drive stocks, commodities, houses, and inflation, and counterintuitively bonds, sending real yields to 1970s lows. Continue. While not an unequivocal negative for stocks, such low real yields have invariably resulted in medium-term elevated volatility. Their base case remains that the stock market rally will pause through the third quarter as volatility rises, yet the dramatic price action in meme stocks, old and new, raises the probability that higher volatility could result in an altered reality exception, one only ever seen in late 1999 near the climax of the tech stock bubble. They said by altered reality, they mean negative real rates, record fiscal and monetary accommodation, record margin debt, and higher trending inflation. In other words, volatility in stocks can keep rising happily together. Can't keep rising happily together. Something has got to give. They're watching a level in particular on the S&P 500. Continue. There's some charts for you. 1999. Continue. We view a break above 4,500 as capable of starting an epic emotional squeeze, not unlike late 1999. It would be easy to envision a further 5% plus rally in the span of an ensuing week or two. After a year of targeted effort by social media traders, could the meme stock dynamic become a more mesmerizing effect, forcing active managers and shorts to chase, echoing the climactic upside of 1999 to 2000? The pair also say it's possible the market could go the other way, dropping 10% if the S&P 500 breaks through its 50-day moving average of 4,300, a level that has held through 2021 pullback moments. The $1 trillion bipartisan infrastructure. All right, next. ECB Weidman warns inflation may pick up faster than expected. So there's been 2 or 3 senators that's already said this about the U.S., and now we see that the European Central Bank's Weidman also says that inflation may pick up faster, but this is in the Eurozone. Let's see the article. European Central Bank Governing Council member Jens Weidman warned that inflation in the euro area could pick up faster than expected and urged not to drag out the institution's pandemic bond buying program. They should take some notes here in the U.S. about this. Continue. Weidman, who is also president of Germany's Bundesbank, will urge to also keep a close eye on the risk of an inflation rate that's too high and not just look at the risk of an inflation rate that's too low, he told German newspaper Welt am Sonntag. In an interview published on Sunday, higher inflation rates cannot be ruled out. The ECB expects inflation to average 1.9% in 2021, mainly reflecting temporary factors before falling to 1.5 and 1.4 in 22 and 23. While the underlying price pressure should strengthen the economy as the economy recovers, the current outlook foresees inflation well below the ECB's goal of 2%. Weidman also said the ECB's emergency asset purchase program, known as PEPP, must end when the COVID-19 crisis is over. The first P stands for pandemic and not permanent. It's a question of credibility. Well, I don't know if the politicians agree with you, Weidman, because apparently things like this always turn into something permanent with them. The program is set to run through March. Next. The price of your morning cup of coffee keeps on rising.
No!
But if you make it at home, you'll be a millionaire in 10 years. Let's see the article. The price of a cup of coffee keeps rising and nobody seems to care. Prices for Arabica beans are up 50% in the past 12 months, hitting 7-year highs in July after drought and frost damaged crops in top producer Brazil and signaled tight world supplies for at least 2 years. The rally comes as high freight costs and shipping container shortages continue to rattle global supply chains, squeezing margins and heightening inflation fears. Many consumer-facing businesses face the stark choice: raise prices or switch to cheaper beans. The good news: coffee drinkers are so addicted that consumption is unlikely to be hurt much, especially with demand still recovering from the pandemic. Continue. Look at that. Arabica coffee futures. Continue. The drink is a key part of consumers' daily routines. It would take a lot to change their coffee habits, said Darren Seifner, food and beverage industry analyst at research firm MPD Group. Customers are accustomed to volatile prices. This year, global coffee consumption is expected to rise to 168.8 million 60-kilogram bags, according to Rabobank International, up from 164. The world market is expected to expand at a compound annual rate of 9% over the next 3 years, well over $400 billion, Starbucks says. In Asia, the fastest growing coffee market, consumption will rise thanks to bigger incomes and a burgeoning cafe culture in China, India, and Indonesia, according to Fitch Solutions. Demand for coffee is not completely unshakable. The pandemic brought the first dip since 2011. But while higher prices this year may curb the post-pandemic rebound, consumption won't decrease. I don't know if my consumption is going to be decreasing either. Continue. Prices would have to climb above $4 a pound to start making a dent in consumption, according to Sterling Smith, Director of Agricultural Research at AgriSompo North America. Until then, price-sensitive consumers may seek out cheaper cafes or make more coffee at home. The impact, caffeine from afar. The impact will differ according to region, said Venusia Nogueira, director of the Brazilian Specialty Coffee Association. Pricing will be one of the many levers that we use to offset these headwinds. Starbucks is feeling inflationary pressures. I also saw that McDonald's is running out of bags, apparently. Yeah. Saw that article, but it was too late to send it in, so. Apparently they're running. Let me see here if I can. Where was it? I guess I could just Google it. From the Wall Street Journal's McDonald's pushes diners to use trays as food bags run tight. Many new crew members have never had to deal with trays. Burger lovers will have to get used to eating off fast food trays inside McDonald's again. McDonald's is facing tight supplies as some of its paper-to-go bags, the latest supply challenge affecting U.S. restaurants. The chain recently told restaurant owners that they need to limit orders of bags from suppliers as usage is running ahead of already high numbers last year. Many customers are asking for their Big Macs and McNuggets and fries in bags even when they dine inside, driving the tightness, the chain said in the message. So McDonald's is running out of bags. Bring your own bag, BYOB, when you go to McDonald's. Starbucks is also running out of everything. Yeah, I've been there a couple of times and they're like, oh, we don't have this, we don't have that. Arby's is out of bags too. I got a smile face Chinese takeout bag from Arby's the other day. Naturally asked, are you still using beef or did you switch to cat too? Oh man. McDonald's ice cream machines are still down. My goodness. All right, let's keep going. Next. Biden's electric car ambitions face real-world roadblocks. So we talked about this on Friday. Biden signed, or Thursday, whenever it was. Biden signed an executive order to make 50% of U.S. car sales fully electric by 2030. But automakers want congressional moves on charging stations and tax incentives. Consumer support also is needed. Well, I think that's the most important part, is the consumer support. Let's keep going. President Biden wants to convert American motorists to electric cars as a linchpin of his plan to address climate change. Success heavily depends on factors outside his control. Somebody sent President Biden a picture of the lithium mines, and then see if, if really that's addressing climate change. The executive order that Mr. Biden signed Thursday, calling on sales of electric fuel cell and plug-in hybrids to account for 50% of car and light truck sales by 2030, has no binding authority. Automakers say they could meet a target of somewhere between 40 and 50% of sales, but only if Congress spends billions of dollars to build out a network of EV charging stations. I love how they always say, only if Congress spends billions of dollars, because they're spending our money. So only if we the people spend billions of dollars to build out a network of EV charging stations and provide tax incentives to consumers, among other measures. Beyond that, consumers must buy in. EVs currently account for about 3% of sales. Wow, so in 9 years, you want to go from 3 to between 40 and 50. That's a lofty goal, reflecting in part generally higher upfront costs and limits on their range. Possibly the biggest hurdle ahead is consumer acceptance, said Jessica Caldwell, an analyst at auto data firm Edmunds. What will it take for Americans to be willing to change their car ownership habits to go electric? Supporters of Biden's plan acknowledge the magnitude of the task ahead, but insist the goal is achievable. The picture of Biden's brain scan and lithium mines. Oh my goodness. That's really good, Michael. Yeah, he's going to have to sign another executive order for those machines to go fully electric at the lithium mines. All right, next. Dollar hits 4-month high on euro as markets bet on earlier Fed taper. Dollar strengthened as far as 1.1742 to the single currency, report says. So it seems that markets are expecting an earlier tapering of the Fed's bond buying program. See the article. Stephen Moore says only 2% of Americans drive electric and 1 out of 2 electric car owners are unhappy with it. I've heard a lot of stories of it taking, weeks for a vehicle to be repaired. An electric vehicle. And then especially if you have to buy a new battery pack for it. Because they, my iPhone battery dies within 2 years where I have to completely charge it all the time. So they really need to work on the battery technology before this can go mainstream. And before I would buy an electric vehicle. The dollar climbed against major peers on Monday, reaching a 4-month high versus the euro. It's electric, yeah. Do we have that? It's electric? The song? No. The dollar climbed against major peers on Monday, reaching a 4-month high versus the euro, as traders positioned for an earlier tapering of Federal Reserve stimulus. The greenback strengthened as far as 1.17 to the single currency, extending a 0.6% pop from Friday when a strong U.S. jobs report stoked bets that a reduction in asset purchases could start this year and higher interest rates could follow as soon as 2022. The dollar index, which tracks U.S. currency against 6 rivals, rose to a 2-week top of 92.915. U.S. payrolls were a game changer. Chris Weston, head of research at brokerage Pepperstone in Melbourne, wrote in a client note. Next. There we go. Jobs report risks different kind of temper tantrum. Robust jobs recovery could lead to pressure on the Fed to hasten a normalization of policy. Joe Manchin has urged the Fed to pare back stimulus to avoid overheating the economy. So Joe Manchin gets it. I don't understand why nobody else gets it. Well, there have been a couple senators who've called for this. Let's see the article. Leave it to Joe Manchin to know which way the wind is blowing. A day before Friday's monthly jobs report, the West Virginia senator urged the Federal Reserve to pare back stimulus to avoid overheating the economy. Variously described as the most powerful man in the Senate and even the most powerful Joe in Washington, I'm sure Biden doesn't like that. The conservative Democrat wields unusual power in a chamber where his party controls exactly half the seats. His case was strengthened by the data. The U.S. added 943,000 jobs in July, about 100,000 more than economists surveyed by the Wall Street Journal had been expecting, and the unemployment rate fell to 5.4% compared with a consensus estimate of 5.7%. The prior 2 months saw upward revisions, adding nearly 120,000 more jobs in total. With the Fed still committed to holding overnight interest rates near zero, where they have been since last March, and to purchasing $120 billion a month in Treasury and mortgage securities, Mr. Manchin's argument is one that increasingly resonates with people who don't hold PhDs in economics. While the economy no doubt bears scars from the COVID-19 pandemic, including millions fewer Americans in the workforce, it is obvious that employers are begging for applicants in many sectors and bidding up for them. Labor shortages are helping to push up prices of many goods and services. Mr. Manchin criticized that the continuation of policy response tailored for an economic depression. Continue. Yeah, I don't think Biden knows that his name's Joe either. Fed Vice Chairman Richard Clarida said Wednesday that the central bank could announce its intention to cut bond rates later in 21, bond purchases, rather, and to begin raising rates in 23. The Fed is formally independent, but could the political winds be shifting in favor of the other part of its dual mandate, stable prices, not maximum employment? Normally, Congress, consumers, and of course the investor class are uniformly in favor of looser policy, with Americans facing sticker shock at the mall and having difficulties buying a home. A schism might develop that could spark more calls like those from Mr. Manchin. Though the Fed doesn't have to act, the pressure alone could spark a rise in bond yields, weighing on record stock prices. It could also begin a splashy fiscal initiatives, such as the infrastructure plan now finalized in Washington, more contentious, but also could pinch stocks. The last taper tantrum to hit the equity market was of the Fed's own doing. The next one might come from the public and its elected representatives. Continue. So we're heading back up with the jobs there. We'll probably see another spike after the unemployment benefits end in September. Continue. U.S. Senator Warren sees benefits of cryptocurrency, but warns a run on crypto may need federal bailout. See the article? U.S. Senator Elizabeth Warren was asked about what she thought the U.S. cryptocurrency regulation should look like in an interview with Bloomberg last week. If people are going to be out there trading it, there needs to be a cop on the beat, she began. Because, we always got to make sure everybody's doing exactly everything that they're supposed to do. Because when there's not a cop on the beat in any market, then it's the small traders who get cheated. And that's what always worries me. The senator from Massachusetts continued, "This is about putting some basic rules in place so that anyone can trade with just some basic confidence that the biggest kinds of scams will have a cop on the beat to blow the whistle and put a stop to it." Continue. Responding to a question specifically about what she thought the biggest upside and downside to cryptocurrencies were, Warren replied, "The biggest upside to cryptocurrency could be the expansion or democratization of access to the financial system. Right now in the United States, we have tens of millions of people who are either unbanked or underbanked, which means they have to go check cashers and pay 3% of their paycheck just to get their cash," she described. They have to pay money in order to make a payment on their utilities or pay the rent payment, and that's costing those people a lot. The senator detailed, "It's possible that moving to a digital currency system, or I should say expanding to a digital currency system, could bring in more people, and there are a lot of different ways that could be designed. As for the downside to cryptocurrency, the downside, of course, is so long as it's an unregulated system, you might be pulling more people in so that they can get cheated, and that's not what we want." I don't understand who made you the mom of the cryptocurrency market. Continue. People understand like risk. Continue. She warned that the bigger the cryptocurrency market gets and the more it stays outside of the financial system, the more we could be facing another financial crash similar to the one in 2008. She cautioned, yeah, but the banks did that, not people. If something goes wrong, there's a run on crypto. There's a problem elsewhere in the economy. I don't want the US taxpayer to be the one who gets called on to back this thing up. So even if there is a run on crypto, the people who would get the bailouts would be the banks and not the people. They're not going to be sending cash to people because they lost money in crypto. So we don't need this. With all due respect, Senator Warren, we don't need a mom or a cop on the beat. Many people took to Twitter to respond to Warren's comment about a run on crypto. Some explained that she's still thinking like a banker. Exactly. And crypto is not like the stock market where bankers go to the government for a bailout. Exactly. Bankers go to the government for a bailout. I don't see anybody from 2008 who lost, their retirement get a check or a bailout from the government. You can't have a run on crypto. You can't bail out crypto. You don't need to. That is the why of crypto. Or with very little respect. I looked at Casino Coin, and I thought it was very very interesting. I haven't investor, but I haven't invested in it, but I did check it out that it's on the XRP ledger, and that is it's true. She also believes that she's an Indian. I don't think they're gonna extend the unemployment benefits. Maybe in California and New York and places like that, but I don't think that they'll do it in the vast majority of states. But yeah, Casino Coin, I have it up on my computer in the office, and I've been doing some research on that one. I've been doing research on Algo and Cardano, and those Algo and Cardano, those are high on my list to buys. I did buy a little bit of Cardano, and I think I'm going to add some Algo too. All right, let's keep going. Billionaire hedge fund manager Ray Dalio still concerned government could outlaw cryptocurrency. Continue. The founder of the world's largest hedge fund, Bridgewater Associates, is still concerned that the government could outlaw cryptocurrencies. Nonetheless, he sees Bitcoin as a digital gold and owns some for diversification. Bridgewater Associates' Ray Dalio is still concerned that governments may outlaw cryptocurrency. Dalio now serves as the firm's chairman and co-chief investment officer. Bridgewater Associates' clients include endowments, governments, foundations, pensions, sovereign wealth funds. Dalio voiced concern in an interview with CNBC, stating that there is a reasonable chance that cryptocurrencies, including Bitcoin, could eventually be outlawed by the federal government. He pointed to the time when Franklin D. Roosevelt signed the Gold Reserve Act, transferring all of the country's privately held gold titles and certificates to the U.S. Treasury as an example. The executive previously explained that any major economic downturn or inflationary event could prompt governments to take similar action on Bitcoin and other cryptocurrencies. We'll see. I don't think they could do that without serious backlash from the stonks community, the stonks and the crypto community on Twitter. I haven't looked into IEP, but I'm going to look into that one. Take a look here, IEP. All right, let's go over the stocks to research today. And for low, we have AT&T. AT&T. I've had this one on here before, and this week I'm looking at it again to see if I'm going to add to my holdings already, because of its high dividend yield between 6 and 8%, and it's trading near its 52-week lows right now in terms of price. And it's a utility company. I honestly don't think they're going anywhere. At least right now, they've got a great dividend. So I think that I'm going to add to my position this week on AT&T. So that's one that I'm looking at. And then a medium is Bank of America, also one of the stocks that I own that I think I might add to what I'm already holding. one of the largest banks in America, focused on pretty much all aspects of banking. They've come out in favor of crypto. We went over that last week. They have a small dividend, also a low price to book value, 1.3x. I talked about them back in June, and they're still trading around that same price. So I think that I'm gonna expand on my holdings of Bank of America this week. Those are some that I'm looking at right now. And then for high risk, MARA, M-A-R-A, Marathon Digital Holdings, digital asset technology. Oh, Riot's up 13% today. My goodness. So Riot is one that I'm already in, and I'm looking at getting into MARA as well, because they just ordered 100,000 miners to add to their... Oh man, look at that. Up 15% today. Nice. Riot. Yep, Riot's up 13%. Let me take a look at MARA here. So those are the two crypto miners that I like. They're up 9% today. Man, I missed out. I should have bought them last week. Take a look here. They're still off its 52 weeks high at around 50, so I think it's still a good... Especially because they're taking over from all those Chinese miners, the capacity. And so I think that MARA and Riot, I think those two are good opportunities. But make sure you research them for yourself. Don't just take my word for it. And yeah, see what we can do. So let's take a look at the tip of the day. That one meme that I sent you. Do you have a couple more in there? It can write, it can make notes. No, it's an NFT. That's how you sell pens nowadays. Do you have the other one? There we go. This is the tip of the day for everybody. I'm not a financial advisor, but I will advise you to avoid taking financial advice from a politician. Or should you take financial advice from a politician? Bank of America threw the Patriots under the bus? How did they throw the Patriots under the bus? So yeah, that was the tip of the day. Don't take financial advice from a politician unless it's Nancy Pelosi. Trade exactly like she trades.
Oh, yeah.
All right. And Evangelist Jonathan is at Choose Life Church in Hobbs, New Mexico. Monday, 7 p.m. and Wednesday through Friday also at 7 p.m. So 8th through the 9th and the 11th through the 13th of August at Choose Life Church, extended for a third week in Hobbs, New Mexico. And then after that, we're going to be in Apopka, Florida, at Word of Life Church on Vic Road, Friday through Saturday at 7 p.m. and Sunday at 10:30 a.m. and 6 p.m. So make it out to those meetings. If you're anywhere in Florida, Georgia, South Carolina, Alabama, Mississippi, make sure you make it to Apopka or in Hobbs, New Mexico. Oh, they did. From their employees. Huh. Cardano and Algo. Those are some of the ones that I'm looking at right now. Here, let me pull up my notes real quick. So Algo is one of the ones that's trying to make cryptocurrencies faster. And it's the same thing with Cardano. And they've had a meteoric rise this year. 88 Cardano. So they're also trying to make cross-border transactions, things like that, faster, and that's why I like those. Good morning, Eric. And if you want to support us here at Revival Today, everything that we do, we're currently building a church here in Pittsburgh, Pennsylvania. And we're traveling all over the United States preaching the gospel. And there's no greater investment that you can make than investing in the gospel. That's where I've seen the greatest returns in my own personal life, is from investments in the gospel and the kingdom of God. And you can do that by going to revivaltoday.com/give, or you can do #donate on Facebook, #donate in the amount you'd like to give. You can text RT to 50155, Cash App $RT give, Venmo @RT give, revivaltoday.com/PayPal. You can also give cryptocurrencies, Bitcoin, Bitcoin Cash, Ethereum, Litecoin, or you can scan that code. There's a couple more that you can give, including Doge, I believe. 412-446-2332. If all that is too complicated for you, you can also send a check by mail. Revival Day, P.O. Box 7, Prosperity, Pennsylvania 15329. And then don't forget to claim your offer, which your offer is our beautiful mug, which is over there. Check the market mug. That way you can show everybody who still watches CNBC and Fox Business that you check the market, which is the show where it's at. Check the market mug will be coming to you, but make sure you claim your offer by going to revivaltoday.com and hit claim your offer so we can send it to you. Because if you give by crypto, it's a lot of times all we get is your name. We don't get your address or anything like that. So make sure you do that. And then this week, I'm also going to do a giveaway for a stock certificate. Yep, we got, I have some old stock certificates, and I'm going to pick one person, and I'm going to send that to you. So it's one of the old stock certificates. I'll get it framed and everything and get that sent to you. So everybody who gives will be entered into that this week, and I'll pick one person from Check the Market, and I'll send that to you. How to buy stock or cryptocurrencies. Thank you, Carrie. Appreciate that. Nick, do you know when those videos are going to be done? What's that? We have 2 ready? Okay. Letitia, we got some videos that are coming out on how to buy, and we're going to post those. Oh, how to buy crypto. You can buy crypto on the Robinhood app, or you can download the one of the apps I have is Uphold. You can buy cryptocurrencies right on there. You can actually use your credit card, debit card. You can use, an ACH from your bank account to put money in there, and then you can buy the various cryptocurrencies. It'll show you a list. I should go over Uphold as well on how to do it, Nick. We'll make some videos for Uphold. And then Coinbase, you can do that on there. Their app is not as user-friendly as Uphold, but it's still fairly user-friendly. And you can also buy some crypto on Cash App, actually. You can buy Bitcoin. What else can you buy on Cash App? Ethereum. I haven't bought any crypto. I know that my wife, Bethany, has bought some cryptocurrencies on Cash App, but I haven't used it for that. Let me take a look. Or you can just buy Bitcoin. That's it. Yeah, it looks like you can only buy Bitcoin on there. So you can buy some Bitcoin if you want on Cash App. Yeah, I think Uphold is one of the best ones. Cardano I bought on Coinbase. Robinhood for Bitcoin and Ethereum. Yeah, I have some Bitcoin and Ethereum on Robinhood too. Let's see what's Bitcoin at. Let me take a look at the prices. Oh yeah, look at that. Bitcoin is up to 46,000 now. So it looks like everybody on Twitter this morning who was saying it was a fake Bitcoin rally. Look at that. Bitcoin's way up. What else have we got here? Ethereum's also up 31.38. XRP's up to 82 cents. Cardano's up $1.47. Dogecoin is up to 26 cents. Litecoin is up 4%. Awesome. My kids are older, but friends have created accounts for their kids and niece nephews using crypto as their savings account. That's a great savings account. Yeah, absolutely. Coinbase does charge very high fees, I've found. Extremely high fees. More than anybody else. I use Coinbase, Uphold, Robinhood, and Qcoin, KU coin. I use that to trade some 3x leveraged Bitcoin ETF or whatever it is they have there. You can make money quick, but also lose money very quickly, though. Awesome. Well, it's been fun today. Great show. Thanks for tuning in. And did I forget anything? Awesome. Well, you guys have a great day, and I'll see you all tomorrow. See you guys.